The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Assalamu alaikum, everyone. Hello, everyone. Can you please reply me about the clarity of my voice? Can you people please reply me about the clarity of my voice? Okay, that's good. That's good. I hope that everyone is fine. And may Allah bless special mercy to us because of that particular pandemic situation. Ameen, Summa Ameen. Okay, candidates, now it's day 3, and I hope that you people are getting benefit, and your confidence value now become increasing day by day. How to handle the situation, how to handle the question. uh, we are now going to start off the day 3. The day 3 particular, I will conduct the session with. I will start the session with the group accounts and then conclude the group accounts accordingly. Number 1. Number 2, we will move to the different accounting standards and the ethical issues as well. So today's sessions still very much important. So now we are going to start the final version of the disposal aspect of the change in, final version of the group structure, that is about the change in group structure. Change in group structure. Candidates, I hope that you people have attended the question what I have given to you, and you people must have to join my WhatsApp group. I will definitely share the particular answer video, a short video about it. But during the live session, we have to move on. So very limited people shared me the answer, and really appreciable. Although answer is already given of that particular situation, and you can check your answer accordingly. But I will also make a short video, hardly for 10 to 12 minutes. Then I will upload on my YouTube channel as well as on the WhatsApp group as well. So now, candidates, it's a final aspect related to the group structure. Candidates, there is an issue related to change in group structure. Listen carefully. Sorry. What if the situation occur related to change in group structure? Change in group structure means at reporting date, you have identified that during the year, the subsidy you have, the subsidy you already have, and you have made some changes. And change may be in 2 aspects. Number 1, the change 2 aspect, that is decrease. Decrease means some disposal aspect, or some increase. Increase means having more shares. So first of all, if decrease, that is the case about the disposal. If increase, that is the case about step acquisition. So our target is that our target or our mindset should be that at the reporting date, how to account for the case related to disposal and the case related to step acquisition. I strongly suggest all of you that you must have to focus the topic that we are discussing in the live manner. Whatever the question you have, you can ask during the break time or after the break on the WhatsApp. In fact, I replied accordingly. Okay. So number one, the important thing is the disposal. Disposal having two scenarios. Disposal in a manner that control become lost. And second thing, disposal of shares, but no control lost. Candidates do remember a very important thing. In all the concept of the change in group structure, you must have to remember one important point. We are here to discuss the effect of change in group structure in group accounts, not the individual accounts. If in the case of disposal, the individual accounts entry is very simple. Bank debit, investment and shares credit. That's all. Gain or loss. But the issue is that what will be the impact on the group accounts? Because in the group accounts, we have established an acquisition accounting. And I must say that acquisition accounting where you have incorporated the fair value of net assets. You have incorporated the goodwill. You have incorporated the NCI account. Although you have eliminated the cost of investment. This is acquisition accounting. So always make up your mind that in the case, for example, in the case of disposal, what will be the impact of control loss with respect to this acquisition accounting? What will be the impact of no control loss with this acquisition accounting? And even the step acquisition. What's the impact of step acquisition with the acquisition accounting? So, number one, what will be the impact of acquisition accounting in the case of disposal? In the case of disposal, what will be the impact of disposal with respect to acquisition accounting? If control lost, disposal and control lost. With respect to examination, whenever you write the answer in the change of group structure, you have to explain in two steps. Number one, what accounting standard says with respect to substance, economic reality, and what will be the accounting treatment. So number one, control lost. Let's suppose there's a subsidy. You have 80%. Three possible situations. Number one, control lost and 100% disposal. Means all 80% dispose. All sell. Number two, Parent subsidy 80%, but you have disposed your 50%. That means 40% of your shares become sold and remaining 40% exist. That means subsidy become associate. Parent subsidy 80%, but you have disposed your 75%, remaining 55%. So subsidy becomes simple investment. In all the cases, control lost. But in these two situations, some investment still remain. Some investment still remain. Here, no more investment. All closed. So number one, accounting standard says if control loss, the gain or loss become realized. The gain or loss become realized. And in case of remaining investment, you have to think in this manner. Listen carefully. You have to think in this manner. For example, parent having right 80%, but now remaining have sold 40% and remaining 40%. That's associate. Candidates, you must have to listen carefully. This is statement, very much important statement. Accounting standard says you must have to think that you have sold your complete 80% and you have purchased at fair value the new 40%. That is what you miss. That is what examiner complain. That student simple mention that gain or loss realize, gain or loss calculate, but not mentioning the substance. The substance is that you have sold all the shares and buy back the 40% at its fair value. That's why whenever you calculate the gain or loss, the double entry should be this: bank debit, whatever the amount you receive, bank debit, and fair value of remaining investment. Fair value remaining investment debit. Fair value remaining investment debit. Fair value carrying amount of net asset 100% dispose, that is credit. All goodwill 100% at disposal credit. Carrying amount of NCI disposal close. And any difference, either loss, either gain, this is loss and this is gain, should be to the profit and loss to CRE. This is what the double entry. And I will give you the format. In fact, I've already given the format. But the important point is that, yes, you know very well how to calculate gain or loss. But the important noticeable point is that, if the control lost and become associate a simple investment, you credit the 100%, but take up the new investment as associate or simple investment. And these wordings are important. That is called substance. You have to sold the complete investment and purchase the 40%. In this pocket notes of the change in group structure, this is clearly mentioned. This is clearly mentioned. This is clearly mentioned. Candidates, can you please reply me about the clarity of my voice? Is my voice clear, all of you? Oh, thank you very much. Very good. Candidates, here all the things mentioned. Number one, if examiner asks you about the disposal case, you have to mention that the accounting treatment is driven by the concept of substance over form. In case control lost, you will mention that with the heading of substance: sold subsidy, deconsolidate subsidy 100%, and recognize profit and loss. And then you will mention this accounting treatment. If becomes sold, consolidation of balance sheet not possible. But income statement may be consolidated. For example, you have sold your subsidy during the year, 6 months, mid of 6 months. So 6 months should be consolidated. Yes. At year start, if you sold out, no P&L consolidation. If you sold out at year end, P&L should be 100% consolidated on a proportion timing basis. But balance sheet, no consolidation. If becomes subsidy to associate, substance says deconsolidate and 100% net assets and recognize P&L. And must mention these words: purchase and associate, remeasurement, retained profit. If you ask me, sir, what is important in this semester about group accounts, I must say disposal. Because in the current environment, a lot of restructuring exists due to the reason of COVID-19. September exams, examiner examined cash flow. March examiner examined foreign subsidy. This time, the suitable thing related to the environment, that's disposal. So disposal is very important. Both cases. Same case related to subsidy to investment, you can read it accordingly. This is what the format where you can calculate. This is format. I've also mentioned the double entry debit and credit. Whenever you need to calculate the gain or loss of the subsidy, what do you require? Fair value of consideration received, fair value of remaining investment, if any. Definitely 100% disposal, no issue. This is the total. And what should be minus? The net carrying amount of net asset subsidy at disposal. Goodwill at disposal. This is what 100%. And what you don't have, that is NCI. So what's the parent position after disposal? That's comparatively. All the debit credit mentioned here. Sir, how examiner examines the thing? That these are the examples. I've mentioned here the 4 examples. And you must have to attempt this. I'm going to attempt some limited part. Read the question first. Read the question first. It's very simple. Read it carefully. Whale purchased 60% interest in Nest 80 million first January export. Then the fair value of identifiable asset 100 million. Whale elected to measure NCI interest at proportionate share of the fair value identifier asset. Examiner will definitely mention always about the NCI. Is it fair value or proportionate? An impairment 4 million arose goodwill Nest in the year end 3rd December expired. Whale sold 50% stock as Nest 75%. Oh, 75 million. 31st December, 3rd December expired. Fair value of Whale's remaining investment 15 million. That means this is the case where subsidy become investment. Fair value of Whale's remaining investment 15 million. Of the date of sale, Whale had carried the investment at cost. Finance director calculated the gain 10 million arose on the sale of Nest and group financial statement, being sale proceeds 75 million less 65 million. Being the percentage identifiable sold 50% of 130 million. This is the norm examiner examine in a case where some mistakes identified. Whenever in the paper, whenever in the exam, you have identified that there is some issue and some mistake have arisen. So first of all, make up your mind. What should be the right thing? First thing, you have to focus. What should be the right thing? Then identify what's wrong. So first make up your mind that what should be the right thing. And then identify what's they have done wrong. And then compare it accordingly. Explain to the directors of Whale with suitable calculation how group profit disposal of the shareholding should have been accounted for. If I am in the examination hall, I always say to you that, and since last 2 days, I've been saying that how you plan your answer. Before attacking, must have to make a plan. Sir, what should we do? First explains first calculation. Anyway, I have prepared a solution in a manner. What if you are sitting in the examination hall? If a student, this is not the copy paste of the revision kit or the past paper. This is what this solution I will show to you. That is what if I'm sitting in the examination hall. If I'm sitting in the examination hall, I must say the case applied in this manner. That's I have to calculate the gain or loss and then explain the answer accordingly. That what should be the what's the principle and what they have done wrong. That is the mind you must have to prepare. Huh? Now, candidates, in the case of control lost, what we need for this calculations, we required fair value consideration received. In this case, very simple available, 75. Then we need fair value of the remaining investment. That's already given. That's 15. Then we required the carrying amount of net asset subsidy at disposal. Goodwill at disposal. Carrying amount of NCI at disposal. So we need three workings. So definitely if I'm sitting in the examination hall, that structure that's in our mind, that's I have to do this. But for the sake of working for this structure, I will start the calculation. Sir, can I start the working with calculation? Yes, of course. You can start with calculation. In calculation, it's better to say that yes, 60, 50, that's remaining 10% become investment. But it is not compulsory. You can direct start with the goodwill. And goodwill working is very simple. Just wasting of time if I'm working on the goodwill right now. That is not the challenge right now you people have. The challenge is how to structure the answer. And this calculation we have already made. That is proportionate method. Huh? Proportionate. So this calculation of at acquisition. But we need to goodwill calculation till disposal. So that's why impairment also booked. Number one. Number two, we need the net asset of subsidy at disposal. But it's very simple. It's very simple because it's mentioned here. That is 130. The net asset, percent identifiable net asset, 130. Number three, non-controlling interest at the date of control lost. So what I must say, NCI at acquisition. That's 140, that's 40. And this is the post-acquisition matter. Disposal date, the net asset 130. Acquisition date 100. So that is post-acquisition. Difference is 30. And the 40%, 12. So now the value NCI at disposal. Now, you simple calculate the gain or profit on loss on disposal. That is fair value consideration received 7.5. Remaining investment 1.5. Not 7.5, it's 75. Sorry. It's 75, not 7.5. And then calculate the net asset, goodwill in this. That's a group disposal, that's 4. I don't think so there is any problem with that matter. Yes, at one page or first 2 pages, We have to mention this. And then clearly explanation. Candidates in the past paper on revision kit and revision kit, the answers are ideal. The answers are not up to student caliber, but I have made the answer in a manner that you are sitting in the examination hall. Now explanation. What explanation? The explanation is that finance director calculated group profit disposal incorrectly. What incorrectly? You have identified it. Prior to the disposal, 60% subsidy. And after selling 50%, we left 10% simple investment. No significant influence. In substance, Vale sold 60% subsidy. So net should be deconsolidated and group P&L reorganized. On the same date, substance net purchased 10% investment. At this remaining investment should be remeasured fair value date of control 31st December X3. That is what I was saying to you. In this paragraph, your knowledge plus case. But you must mention that the word deconsolidate, the very important word. Become no significant influence. That means become investment. And the word substance. Substance. That we have disposed. So de-recognize. And in substance, new purchase of 10%. Candidates, please reply me. Are you getting my point? How you will write the things? That is the point. That is the key point. If you show that like that, it's not possible for any failure. After that, you must mention ideally the finance director, finance director was correct to calculate group profit and disposal, but made 3 errors, one by one. In the above case, deconsolidate, but only 50%. That's a mistake. It's not about if control lost, you have to complete de-recognize, not only 50%. Forgotten to deconsolidate goodwill and did not measure the investment at fair value. And you will mention that the correct loss will be 10 billion. That is the point. That is, if in the case of disposal, you will write the answer accordingly. Candidates, this is the first case I have discussed with you about change in group structure. About change in group structure. Candidates, another point. Change in group structure, listen carefully. The case of disposal, but no control lost. No control lost. Listen carefully. If you have any question, hold it. Don't worry about it. I am with you till examination. I will clarify all the aspects. But focus and develop a momentum. Disposal, no control lost. For example, parent have a subsidy that's 80%, but only sold 10%. So that means 70%. Candidates, do remember one thing. When the acquisition accounting start, I'm sorry. When acquisition accounting start, for example, you purchase originally 80%. What you what how acquisition accounting works? Acquisition accounting works. Parent consolidate net asset 100%, not 80%. This is controlling interest, CI, controlling interest. And we don't have control, that is non-controlling, 20. So automatically affect 80%. But we consolidate with 100%, that is substance. Substance says you have to consolidate 100%. But the figure you don't have, that's 20%. If you have sold out 10%, very simple scenario, and you still have a control. So that means net asset should be consolidated 100%, same like this. But actual issue is that NCI should be 30%. So your effective interest becomes 70%. So accounting standard says there is no realization of gain. We have sold some shares, so bank debit, but we cannot realize the gain like the control loss. In fact, actually in the case of disposal, there is an arrangement between shareholders, equity arrangement. We still have a control, but our equity right now become decreases. That means NCI increase. So we have given more rights to NCI, but still control exists. If there is any difference between these two aspects, so we have to adjust with equity. We have to adjust with equity, that is OCE. Either charge or credit. That is charge or that is credit. But it's still consolidated. But the question is that how to calculate this increase in NCI? This is important point. NCI increase. The way to calculate NCI increase is that first of all, we have to calculate NCI till disposal date. We have to calculate NCI till disposal date. And then make an adjustment. What adjustment? 10% increase with this value. That's make an adjustment. Whatever the figure we calculate before disposal. For example, NCI disposal date 20%. This value is 1000. So we will calculate 1000 multiplied by 10%. That's a value 100. So that is called increase in NCI. This 100. We will mention 100 here. Bank, for example, 110. So it means we have given right to NCI 100. Given right to NCI 100. That means we have lost 100, but we got the amount 110. So 110 is actually credit to equity. Credit to equity. And that is what we have discussed here. This occurs with decrease in parents' shareholding through the sale of shares. It is sometimes called decrease in controlling interest. Decrease in controlling means increase in NCI. And the treatment of the group accounts must be with the concept of substance. And by substance, you have to mention no disposal, transaction between group shareholders, and recorded in equity OCE. And then you will mention accounting. What you normally do, you just mention the accounting. But what's the principle? Examiner expected to explain this principle, my dear students. This is the missing factor. And you lost your marks. You are losing your marks with these reasons. Yes, accounting, statement of financial position, consolidate. NCI. I have mentioned how to calculate NCI. Increase here. No need to recalculate goodwill. No need to recalculate the goodwill. In income statement, 100% consolidated. Yes, NCI will be time apportion. And income statement, NCI will be time apportion. For example, 9 months disposal, 3 months after disposal. For example, NCI first 9 months, 20%, and remaining 3 months, 30%. That is called time apportion. That is what the point. Candidates, question time. There is a question. I have mentioned in this document 4 questions, and this you will get a great idea about it. Disposal, no control lost. Disposal, no control lost. Read this question once. Read this question. Make up your mind accordingly. Yes. If you are appearing with the computer-based exam, the working of the goodwill and the disposal you can do because question number 1 have an option. In the SBR computer-based exam, question number 1 have an option for the spreadsheet. So goodwill and the disposal calculation and NCI carrying amount net asset you can work out on the spreadsheet. Yes. Okay. On December 2000, trial made 80% dial 600 million, $1 shares for cash consideration, 800 million. Had acquisition fair value of NCI 190 million. Trail wishes to measure NCI at fair value. Had the date of acquisition. 1st December X0 retained earning 300 million. and other comprehensive income 20 million. Fair value of Dal's net asset was equivalent to book value. 30th number X 1 12 sold 5% shareholding 60 million. 30th November X1 retained earnings 400 OCE 30 million. Explain and calculate the following figures. NCI and equity. Here I deliberately, if some of you wants that now, sir, I will perform first the explanation. Go ahead for this. Both can you working, but that should be very much clear. That should be very much clear. Number one, your explanation start with principle, whatever we have discussed. But knowledge with case, if you not connect the wording of the company, you will lose the marks. This case, trial have sold the shares, but the control still exists. IFRS 3, if not mentioning the, if you are, just forget it, IFRS 3. Standard says decrease in parent sharing in existing subsidiary through sale known as decrease in NCI. Oh, sorry, decrease in CI. Treatment in the group driven by the concept of substance. In substance, no disposal. Entity is still subsidiary. No profit should be recognized. Instead, transaction between group shareholder, that's parent selling 5% NCI to the NCI, and recorded equity as well. That is the focus point, candidates. That is the reason of the failure. That you are very hurry with this descriptions. Then you can mention the accounting treatment, SEs, and the difference between the proceed and increase NCI should be OCE. And then you made working for it accordingly. That is what the NCI. First, if I wanted to calculate what's the gain or loss. So first of all, how much amount we receive? 60. Increase in NCI, that is 56. How to calculate increase in NCI? So you have identified NCI. First, we need to work out what is the value of NCI at the disposal date. That is what NCI at disposal. So NCI fair value at acquisition, that's mentioned on the question. And post-acquisition retained earning, post-acquisition other component. The previous shareholding, that is 20%. 30 and 4, 24. And then increase in NCI, simple 224 into 5%. Oh, there is some mistake in this here. I'm going to rectify it. Just a minute. $224 into 5%. I'm sorry. $224 into 0.05. That is 11. One moment, please. Just a minute. Sorry. Okay. NCI value, that's 190 plus 30 plus 4. That's already 20%. So that's equals to 224. No, no, no. Ignore this 20% division. That's the mistake in the book. It's simple, 224 into 5%. It's simple. How much the value? No candidates. Now listen carefully. I'm working here. Number one, NCI before disposal. Before disposal. That's equals to 190 plus 30 plus 4. That's equals to 1224. And now we are working increase in NCI. And the increase in NCI 224 and multiply by 5%. That's 11.2. Simple. Don't make it complex. Simple 5%. That's proportion value. Doesn't matter. It's a step acquisition method. Okay. So that's equals to 11.2. So adjustment to equity. We have received fair value 16, 60 and 11.2 increase in NCI. So difference become 60 minus 11.2. That's 48.8. And that difference should be OCE credit. That should be OCE credit. No, no, it's a right working. Don't worry. It's a right working. It's a right working. Yes, 60 million is given in the question. Yes, of course, 224 is the 20%. 224, this value is already 20%. And we have to increase, add on by 5%. That's equal to 25%. That's all. It's so simple. It's so simple. No, no, it's adjustment. It's adjustment. Adjustment means how much NCI increases. Okay, candidate, that is done. That is done. That is all done. Okay, 1 minute. 1 minute, 1 minute, 1 minute. 1 minute, please. We have to work out accordingly once again. 1 minute, candidates, listen carefully. Number one, ignore disposal. Ignore disposal for the time being. Ignore disposal. Okay, candidates, listen carefully. We have to conclude. Ignore disposal. Number one, NCI at acquisition. That's 190. And that's represent the 20%. Fair value NCI at acquisition, 20%. Okay. And then we put the post-acquisition reserves with the 20%. That is 30 and 4. And NCI at disposal, before the disposal adjustment, that's the working of the 20%. So this 224 is actually reflecting the 20%. That is the 20% of the NCI. Okay. So first of all, we have to work out accordingly how much the net asset of subsidy at disposal. Okay, I was wrong working. Net asset at disposal. Net asset at disposal means okay, ignore the net asset. Okay, candidates, you were right. That was a little bit a mistake here. Okay, it's okay. Just 56 values is right. Apologies for this inconvenience. Increase in NCI. That's 224. Itself 20. And we have to increase by the 5 matter. So I think that confusion has now become clear at my side. I'm sorry for this inconvenience. So you people are clear accordingly. Is there any confusion right now? My apologies from my side. Sorry. Is that clear, everyone? Okay. Okay. Once again, actually the point is that we have to work out accordingly. We need to increase in NCI. Sorry. We need to increase in NCI. Increase in NCI, in fact, in a manner that NCI itself right now 224. So 224 itself, the 20%, and we have to increase the value of the 5%. So whoever have a confusion, it's very simple. If you are NCI, you are holding the 20%. So this is 20 and increase by this 5. That's by 56. Okay, candidates, that's all over. So number one, this 56 based, the increase in NCI and adjustment to the equity. Adjustment to the equity. And what's the adjustment to the equity? 60 of the consideration received and increase in NCI 656. Increase in NCI means we have given rights 56, but receive payment 6. So that means 4 is credited to equity. We are in a benefit position. Benefit means we receive higher amount, but lost lower amount. That's why we got the gain and the equity. It's not the gain to P&L, but to the equity credit. But candidates, final point. The final point. How much become the NCI? So before disposal, that was 224. and you make an entry NCI increase 56. So now become NCI 280. So that is the total. If you people have any confusion about the debit or credit, make entry. We received the amount 60, but the NCI increase 56. So what should be the 4? That OCE should be credited. That's all. NCI is equity candidate. So if increase, that's why credited. Okay, candidates. This is the group structure first point. This is the first structure. Now, candidates, next point. One more quick working. One more quick working. Change in group structure. Change in group structure. But what about the step acquisition? A quick working, quick review. For example, parent, subsidy, 10%. Step means already I've shared, but adding more. We have adding 60%. So that means 70%. Parent, subsidy, 25%. But adding 45%. Parent, subsidy, 60%. But adding 10%. This is all step. But we have to step aspects in two components. Number one, no control to control. Number two, control already exists. Two aspects. Control already exists. Do remember the very important point. When the acquisition accounting starts, acquisition accounting starts where control exists, where control creates. Where control creates. Here the case, the control with the second step. But here the control already exists. This is case 1. This is case 1. That's called investment to subsidy or associate to subsidy. Investment or associate. Candidates, if become no control to control, either investment to subsidy or associate to subsidy. The very important point you need to consider that, listen carefully. First case, no control to control. This first case. The point is that if no control to control, what accounting standard says? Accounting standard says, number one, here the acquisition accounting starts. and the cost of investment. About previous investment, previous means where no control exists, is that you have to consider, you have considered that you have sold this investment and repurchase the complete investment. For example, 10% plus 70%, sorry, 10% plus 60% is equal to 70%. So we will assume that we have sold the 10% and the complete repurchase of 70%. That should be in our mind. That should be in our mind. That is what? If we calculate the goodwill, so goodwill includes the cost of investment of the previous 10%, and that should be fair value at the date of acquisition. At the date of acquisition. And 60% new investment. So two important things about this 10%. Any particular gain, for example, you originally purchased 1st January 2017, but now this date is 31st December 2019. So this difference, this timing difference, the investment should be at fair value at that date. Fair value. So any fair value adjustment at this point immediately immediately to the profit and loss account to CRE. So two things important. Previous investment should be at fair value, and any fair value adjustment should be adjusted to the profit and loss account. That's the key point. That is the key point. And second important thing is that any previous unrealized gain. Sir, what does that mean, previous unrealized gain? For example, this 10% investment, we have already hold fair value OCI, and there was some unrealized gain. Any previous unrealized gain become realized to retain earning. So candidates, I must say one thing. Listen careful. You must have to bear two things in your mind. Number one, whenever you calculate the goodwill calculation, cost of investment should be at fair value. Either previous investment or the new investment should be at fair value at acquisition. If in the exam question, the cost of investment is not at fair value, you must have to adjust with fair value. Any previous adjustment must be adjusted accordingly. Must be adjusted accordingly. And the fair value adjustment should be credited to the P&L or debit to a P&L. Number two, any previous unrealized gain should be adjusted accordingly. Candidates, this is what in the notes already mentioned. I strongly suggest that you have to mention this terminology. The substance, the concepts of substance derived from accounting treatment, and the legal form that some shares have been purchased. However, substance which reflect in group account is that simple investment have been sold, or associate case, the associate sold that investment previously held, remeasured to P&L at the date of control. You must have to mention this statement. And then accounting. This statement, very important. Whatever I shared with you. The gain loss recognize P&L unless investment previously held in equity instrument and the election was made fair value through OCI. New investment, I mean new fair value adjustment must be at fair value. Previous unrealized gain should be adjusted. You can read it accordingly and you can mention accordingly. Candidates, last one. In change in group structure. Last thing. Step acquisition. Control already exists. Control already exists. Listen carefully. Control already exists. For example, parent having already exists 60%, then 10% at 70%. It's a very simple aspect. What we will say, that change in equity and simple NCI 40% now drop to 30%. And accounting standard says it's not about any gain loss. It's simple. If you purchase, that's bank debit or cost of investment credit. Debited, that is NCI decrease. Any change should be credit or charged to OCE, life disposal. But here the very important thing is that how to calculate NCI decrease. So whatever the NCI at step acquisition, you have apply the proportional percentage. What percentage? Proportional percentage. Proportional percentage means in this case, if NCI 40% and changed by 10%, so proportional percentage means proportional. NCI decreased by 10/40 into 100 is equal to 25%. That should be applied on NCI percentage, proportional percentage. What I say? It's not 10%. It's 10/40, that's 25%. And whatever the value here, that is the value become NCI decrease and adjust accordingly. Candidates, here, 2 questions exist. You can attempt accordingly. I will share it with you. But I don't have enough time to discuss this step acquisition accordingly. But you don't ignore this. The important aspect is disposal, but you don't ignore the step acquisition. It's still important. But the more important is disposal matter. Candidates, are you people with me? We have concluded our disposal matter group accordingly. I will share you the sequence of the question sequence of the question with you. I will share the sequence of the question with you. I will share the sequence of question with you. The practice aspect. I will share the document with you on the WhatsApp group. You must have to review my session and read the pocket notes and sequence. Maximum 6 to 7, 8 to 9 questions. You have to work out accordingly. That's all for the next 14 days. Candidates, now it's time to move for the more standards. I will move with the topic of the derivatives. But before starting up the matter of the derivatives, I will introduce something about the ethical matter, how to deal the concept of the ethics in the exam question. But before that, you have to take a break. We will start more accounting standards accordingly. Take a 10 minutes break. In fact, 8 minutes break. Come on with 8 minutes, in 8 minutes. Okay, thank you very much. The next topics, ethics and more standards. Thank you. Okay, please reply me. Are you in now? Hello. Okay, 1 minute. Okay, let's start. Okay, candidates, number 1. The important point is that Bismillah Rahman Rahim. Ethics. Ethics in SBR exams. Number 1. The important point is that section A, question 2, 20 marks. What 20 marks includes? 20 marks includes accounting implications, ethical issues, and sometimes performance measurements. So examiner will examine what? Examiner will examine the accounting case plus ethical matters and sometimes some performance measurement issues. I've already shared this notes, compile notes of question 2, and you can easily read it and work out accordingly. Inshallah, you will go for exam. You will get the benefit from this. That document is enough for you for the remaining exam days, plus the past papers, nothing else. Number 1, you people know very well What is the meaning of ethics? Number one, ethics actually the gray areas, it's not the legal areas. As a professional accountant, as a professional accountant and ACCA member, we have to follow the ACCA published fundamental ethical principles. And the principles are integrity, objectivity, professional competence, confidentiality, professional behavior. That is what the ethical rules we have to follow. Yes, of course, sometimes issues arises, and issues arises as an accountant. We feel that in front of us, for example, the management person, or sometimes we also as a member of the company or as a participant of the company feels that I'm working, or in front of us, some of us, sorry, someone in front of us, like a manager, boss, working for self-interest rather than company interest. Not proper segregation of duty, so self-review. Sometimes, especially for audit case, advocacy. Sometime in the audit case, familiarity. And sometime in accounting, in the normal other than audit as well, intimidation, involvement, threats. So the issue is that if these threats arises, so definitely the principal may compromise. And you know very well what I'm saying, huh? Actual sir, tell us how to deal the case. That's all. How the examiner examine the case. Candidates, you have to remember one very important thing. And that is the point. Whenever the case of ethics, these steps you have to follow. Means question number 2, in majority case, these steps you have to follow. Number 1, you must have to identify the relevant facts. Relevant facts means the accounting issues. Because examiner always examine the accounting issues plus ethical issues. So the issue is accounting, huh? Accounting includes, maybe possible, some performance measurement issues. For example, covenants, and there are the chances of the breach of covenant. Sometimes accounting standards with performance measurement issues. So you have to identify the relevant facts related to accounting issue. Plus, what are the ethical issues? Means why this accounting is going wrong. What the reason is? Some ethical matter, like self-interest. And someone pressurizing, intimidation, involvements. So first of all, you have to identify the accounting issue, relevant facts, ethical issue, and what principle are threatened. Normally, this is not the matter of issue in SBR. Means, first of all, you have to check the internal procedures because it's a matter of the audit. Yes, but as an accountant, the alternative course of actions. What alternative course of actions? If we are an accountant, that is very structured matter. Number 1, this example is a great example that you can get an idea about this facts. MASH. For example, MASH has a number of investment in listed shares that is designated to be measured at fair value through OCI. Means match with a company, and that's investment in shares designated fair value through OCI. A new qualified accountant like we started work at Mesh, and she discovered that finance director, so one role, finance director, measure the fair value investment at the present value of the future cash flow dividend receipts. So something goes wrong, IFRS 13. The calculation gives higher fair value, quoted the share price. Finance director justified fair value measurement accountant on the ground that Match does not trade shares in the short term, but so quoted share price understate the value. The very important thing is that this is listed shares. Listed shares means its fair value already exists in the stock market. And the stock market is so-called the active market. And by active market, that's qualify for level 1. So if the market exists and we can identify the value from the level 1, why we are going for level 2? Sir, what is level 2? This present value future cash flow dividend received is the level 2. In fact, level 3, the company's dividend, level 2, level 3. This is wrong. And also the matter level 2, 3 having higher fair value. And justification is totally wrong. So if this is the case, so mention that how examiner discuss why finance director fair value measurement not in line with IFRS and discuss the ethical issue. You have to headed the accounting implications separate and you have to work out ethical issues separate. Make heading. And don't be shy to make heading, yaar. Don't be shy. Number 1, identify facts. I'm not reading the solution. Facts is about IFRS 13. That is the facts. That using the wrong accounting standard aspects. And you as an accountant must put the knowledge accounting. That should be the matter. And then make heading ethical issue, ethical case. What is the case about the ethics? That's a self-interest. That is threat and impact on principle. Self-interest, reason is self-interest maybe, an impact on integrity, objectivity. Number 2, if someone unaware, that is the point of professional competency. And its effect to the reputation of the company. So that is the ethical facts. But what the action, this is the conclusion paragraph. That is the conclusion paragraph. Candidates do remember one thing. If in the exam question, the question have a theme that your role as an accountant means your role as an accountant, you are facing the situation as an accountant. And some management, for example, finance director, also, or other part of the management, directors, finance director, CFO, you have identified this matter. Means theme is this, there are 2 roles, you accountant and one role is finance director or any other person. So this action point as an accountant, you can just fix it. Always. You just fix it. Always. And you will get 1.5 marks. The action point, accountant must therefore comply director instructions. Accountant remind the directors. Number one, must not therefore comply director's instructions. And means management instructions. Must remind director to the obligation to the code of ethics. Should the accountant feel unable approach to director, then consider talking to other part of the management. That's non-executive directors. Explain the situation. And also mention that all the communication should be documented through emails. The accountant could also seek help from ACCA helpline, ethical helpline, take legal advice. And last result, ultimate if situation cannot be resolved, accountant should resign and employment self-help. This is standard paragraph, but not always. Only with the theme that the accountant action point required and mentioned on the examination. And I have also mentioned this one. The SBR standard answer ethical points. If you wanted to start the thing, your question will start with this para. Standard answer. Means you can start with this always and get the 2 marks. And the theme of the question is accountant actions. Put this. And your luck, this standard paragraph will support you for 2 to 3 marks. I have mentioned that a standard conclusion paragraph only relevant for ethical issue between accountant and the management. If the issue about accountant and the management. But this first paragraph can be used at all the place. At all the place. You can read it. It's a very general paragraph. Financial statement, important, range of users. Who are the users? Shareholder, banks, employees. Stakeholder required financial statement, faithful representations. Position of the company to make adequate investment decision. Accountants should comply with the ethical principles. This paragraph. Following code of ethics, likely to faithful representation the company offered because needs of the user of the prioritized. Accountant should be mindful of any threats of the fundamental ethical principle. In doing so, accountant consider the relevant facts, ethical issue, principles, threaten internal procedures, and mitigate the threats. Just mug up and apply it accordingly. This is how to deal the ethical issue. It's very simple. I hope that you got the point. Next one. Moreover, I strongly suggest you must have to read this article. Ethics in the digital age. Last time examiner already examined this point, but you have to read it. The question is September specimen 2, question 18, 2018. Specimen 2. This is the question. This is the question. But before this question, I will discuss 2 things, derivatives and a quick briefing of derivatives and quick briefing of the ICE 37. Quick, 10 minutes. But Listen here. Discuss the ethics and accounting implications of the above situation from the perspective of accountant. Here, there are 2 marks for the application of ethics. That's why this you can easily get the 2 marks with the standard paragraphs that I have referred above. And you can get the marks. But you have to put the name of the company. Specifically heading accounting implications. Specifically, this is accounting issue. 2 accounting issue and ethical implications. Specifically heading. And in ethics, the action point. This is a marking scheme. You can check it. Accounting issues, ethical issues, and professional marks. Candidates, can you please reply me? Are you getting the point? How to deal the matter of ethics? Hello. Standard is the opening paragraph, action is the conclusion. If the theme is about management and accountant, the theme may be different. I will discuss later. And I know very well the standard type of solution, you people love it. According to the professional marks, how do we answer? If you write the answer with the standard, means conclusion, ethics, you will get the answer. We will discuss this point moreover with a question. Yes, yes, yes. Start with accounting issues, then ethical issues, conclude with the actions. Okay. Next move. Now it's time to move with the accounting issues. And those accounting issues where you normally stuck. Number one, derivatives. What are derivatives? This document is enough for the knowledge of you for derivatives. You don't want to go anywhere after this session for the derivatives. Don't go anywhere. Just read it. This is good enough. More than enough. Candidates, listen carefully. First of all, I'm going to tell you some important things about the derivative. 5 minutes from my side. Derivative contracts. Listen carefully. Let's take one example. For example, we are airline company. Listen carefully. We are airline company. Okay. And the material we required is, for example, jet oil. Oil. Regularly used. Our financial year end 31st December 2019. And the company have made a transaction here. Transaction. What transaction? Management is At that point, management is considering that the price of material, what? The price of material will increase in future. For example, the date of the transaction, 1st August 2019. 1st August 2019. And they are very much concerned that the price of the jet oil will increase over the future. And they are very much concerned. They regularly use this inventory, material inventory. So they go to the bank and make for the forward contract. For example, make a forward contract of $50. What does that mean, $50? $50 for a certain quantity. For example, 1,000 barrels, whatever quantity, leave it. What this $50 forward contract means? This means, sorry, forward contract $50 and the date of this particular contract is 15 March 20. First of all, you must have to develop your mindset that you are not studying AFM or FM. You are studying SBR. And what is the scope of this forward contract in SBR? In SBR, you just have to develop mindset at year end. At year end. How to report this transaction. That's all. We will not think after the year end at the execution date. What will happen? That is the point of AFM or FM. Our concern point is that how to report this transaction at that point. That's all. So let's once again. We are an airline company. Material, jet oil, 1st August 2019, we are concerned that price will increase. So we have made a contract with the bank, $50 by name forward contract. What this contract means, and this contract will be settled at 15 March 2020. Means after the year end, 1.5 months of the year end. Oh, 2.5 months of the year end. What does this forward contract means? Forward contract means we have locked this price. Lock this price means if at 15 March 2020, the price actually increased, for example, it's became 55. So bank will settle the difference. Bank will settle the difference. Yes, if the price decreases, for example, it's become 48. So we have to settle this matter. Okay, this particular forward contract about jet oil. But normally, the transactions are purchase of material. Material here, jet oil. JO, jet oil. But here is not about the purchase. This case is not about purchase. We have locked the price only. We have not committed with the bank that we will purchase the material that jet oil will be with the bank. This is only a betting contract, bet, where no material will actually be purchased, but the material pricing will be adjusted accordingly. Either I can win or I can lose. So this type of transaction, that is the forward contract, It's not about the purchase of material. We will say non-executory contract. What contract? Non-executory contract. And if we have normal business transaction, that normal business transaction calls executory contract. This non-executory contract have some characteristics. Number one, will settle in cash. Will settle in cash. Cash means, oh sorry, will settle in net cash. Net cash means at the end of the day, we will not buy or sell the material, but we will adjust. Adjust means we lock the rate 50, now become 55, settle net. We got gain. Here, settle net, we have to pay. Number one. Non-executory means settle in cash. Number two. Sorry, this one number two. Number one. Its initial value 0 or very minimal. Its initial value 0, minimal. 0 means if we make the forward contract, initially we don't have to pay to the bank. Sometimes in the practical world, we have to pay some amount as a deposit. But ignore here. 0 amount. No. It's 0. Immediately the 0 value. We don't want to pay something right now. Whatever the payment received or have to pay at the end of the day. We will discuss later about the option contract. In option contract, we need to pay some amount. That's premium. That's number one. Number two. Number three. Okay, number three. Candidates, this point you have to listen carefully. Very carefully. Candidates, add reporting date. Add here, reporting date. Initial value 0. But there are some value at reporting date. 1st August to 31st December. The times has gone. And the picture now become clear. Either the situation with our favor or situation against us. Sir, what does that mean? This means that we start our example. We need to purchase the jet oil. And we have a risk that price will increase. And we have made a transaction with bank 1st August 2019. At 31st December 2019, the tendencies actually increase or decrease. If increases, this means this contract is our favor. If decreases, that is not our favor. So candidates, the point is that this forward contract value will fluctuate. And this contract value is fluctuate. That's called jet oil. And its value depend on market conditions. We cannot control it. So I must say the value of contract, C stands for contract, based on market variables. Market variables. If I ask you that, ask yourself, why oil prices changes? What the reason? What you will reply? Sir, multiple reasons, economical reasons, domestic economy, foreign economy, multiple reasons that call market variables. So in my example, the important thing is that this forward contract, it's not an executory contract. It will be settled in cash. Its initial value is 0, and in the case of option, minimal. Its number of variables. Now, candidates, this is what about the forward contract. One simple thing. Whatever I'm saying that is the definition of the derivative. If examiner asks you or you need about the derivatives, what you will say that derivative are the contracts with the following characteristics. Number one, it will be settled at future date. Settle means net in cash, non-executory. It requires no investment or little investment. Its value change with the number of variables. Underlying means variables. Keynote. Derivatives are non-executory. Number one. Number two, another important point. In the practical world, whatever I'm saying to you, that's I said to you that I go to the bank and lock the rate. It's a game of speculation. Now, the very much important exam point. If derivatives, examiner can ask you one thing, is the contract derivative or not? That we have discussed above. If yes, then ask how to account for. Derivative accounting, do remember, if it's for hedging, we cannot discuss right now. Go and refer your regular studies for the hedge accounting. But here we are discussing the derivatives for speculation purpose. Sir, what is the meaning of speculation purpose? Candidates, I have given you example that the airline company is worried about material, then go for forward contract. If any of the derivative is for certain purpose to make a protection of some asset liability, that is called hedging. Hedging means derivatives but purpose based. Derivatives but purpose based. Derivatives but purpose based. But if in the question I say that an airline company arrange a forward future contract, but it's not for the purpose of inventory value protection, just for the sake that go and get the profit, that is called speculation purpose. It's something difficult to understand. Sir, why a company get the derivative without any purpose base? Candidates, be mature. For example, you are GSK, you are ICI, Unilever's. And you are Unilever's treasury team. You are a part of treasury team. What is the role of treasury team? Treasury team role is that if the company having some spare fund, so we can utilize to invest in the market. Normally, Unilever's business, for example, to produce shampoo, detergents, walls, ice cream, food item. But during the year, some funds are spare. So treasury team having a role to go and invest. So treasury team can invest in the speculation. If the company for the speculation purpose derivative, only one accounting, fair value P&L. That's all. At the reporting date, now conclude. At the reporting date, in this, at that date, at the reporting date candidate, we as an accountant consider that we purchase the derivative just for speculation purpose. That accounting is only one, that is fair value through P&L. The derivative we purchase during the year in a favorable position, that's called fair value through P&L. Unfavorable position, sorry, that's called fair value through P&L, and as an asset, gain. Unfavorable position, fair value through P&L, liability. Candidates, are you getting the point what I have said to you? Or leave it for the time being transaction fees. I'm not discussing right now the transaction fees. I will discuss tomorrow about the financial instrument. Just limited point about the derivatives matter. Oh, please reply. Okay, come on here. Candidate, this is the time to review the things. This is what I have incorporated the important elements. And last point about the derivative, then make an example. Last point. I just ask a question with you. I use the word betting. I use the word betting. For example, today is 15 December. And you and me going to take up betting. Betting means forward contract. With a bank. About a share. About a share. Listen carefully. This is the very important point. Right now, a share price is $20. Right now, share price $20. And we make a forward contract of $22. With that matter, at a certain period of time, if the price actually moves more than 22, then I will get the gain. And if it's less than 22, then I will get the loss. And we have determined 1,000 shares. I have a question with you. If we stand at 15 December, can we confirm that how much cash will be settled in future? Answer me. Can we confirm initially that how much cash we will gain or lose? Or reply me, all of you. Yaar. I want to answer. There are 200 people. Answer me. Can we initially identify that how much actual cash we can win or lose? Actual cash. It's never possible. It's never possible. But number two, for how much instrument we have made for bet? Is this fixed or not? For how many number of instruments? How many number of instruments? We have already bet or made a contract. Yes. Oh, do remember, that is the wording in the books and standard. And standard. A derivative, read it. A derivative contract will be settled by exchange of variable amount of cash. Variable means we don't know about the cash. For a fixed number of instrument. These wordings are very much important. Derivative always for variable amount of cash for a fixed number of instruments. Candidates. So, two important points till now. Derivatives. Examiner examine. Two contents. Mark my word. In SBR exam derivatives, identify contract is derivative. D stand for derivative. Yes or no? Number two, that is the first thing. You just identify, is it for speculation purpose or non-speculation? I mean executory, non-executory. Number two, accounting. Accounting by speculation or hedging. Speculation, fair value, P&L. That's all. This is what the scope of SBR. Only prepare the derivatives with this context. In this handout, there's no hedging matter. Read it carefully. Read it. Oh, candidates, read it. Now it's time for exam question, but first you have to read it. Yes, I know the pace is a little bit higher, but you have to be with me. You, me are in a place that you all people must be motivated that you have to qualify the exam by this December, inshallah ta'ala. You wanted to get some positive things, although the COVID is going on. That's you have to qualify the exam. I'm with you. I can support as maximum as, and in fact, I'm doing this. Now read it. Be confident, be motivated, be energetic. Derivatives should, and if any transaction cost, that's immediately be measured at. But forward contract, initial value always zero. At the reporting date, derivatives are measured to fair value. Movement in the fair value of recognized P&L. Now, read it. Barcel Wonder Products Incorporated makes several investments. Number one, forward contract entered 12 March, 12 March XX to purchase equity shares. $10.12. On 5th January, lays down the plan. for the purchase of mention, lays down the plan. But here, the forward contract. Is the forward contract means we have made a contract to actually purchase the shares? Answer me. Point number one, forward contract means are we going to purchase the shares? With respect to forward contract, with respect to forward contract, if nothing is mentioned, you will consider that. If nothing is mentioned, you will consider that this is non-executory contract. Now listen, A part. The forward contract entered into purchase shares is a derivative, should be recognized in financial asset liability, non-executory contract. Initial carrying amount forward usually zero. Later, as the contract becomes favorable, unfavorable, it will be measured at fair value recognized as an asset or liability. First of all, reply me. Is that is that clear, all of you, about this point? A point. Please reply. Next one. Thank you, Mohammad Irfan Khalid. Is this appreciation from your side that should I consider a compliment? The statement you have given. Oh, thank you. Sometimes we must have to develop some important factors in a quick manner. Okay, because we have to pull out the audience. Okay, number two. Number two is plan to purchase. Plan to purchase. If we have a plan to purchase, that is the non-derivative contract. Because plan to purchase means execute. Execute means we will actual purchase the asset or liability, whatever. So now next statement is very important. If we have a contract of the derivative, that means that need to be settled in cash. That need to be settled in cash. That must be recorded now if it's value, and subsequently whatever the matter. Moreover, candidates, moreover, number two, second one, if it's not the derivative contract, which means that we have committed to purchase in future. So, for example, if I say to you that I will purchase the machine from you after year end, I will purchase the machine from you after the year end and actually purchase. So should I record any transaction at reporting date? Answer me. I made a commitment to you that I will actually purchase. No, no way. Number one, if I have a plan to actual purchase, that is not the derivative contract. Number two, if it's not the derivative contract, it's a normal contract. And this laying down plan cannot be recognized. This is because that time no contractual right and obligation to pay cash in future. Okay, that's all. One last point, candidate, one last point. Listen this point very carefully. Listen this point very carefully. Candidates, listen this point. 15th November 2019. Our local currency is Pakistani rupees, foreign currency US dollars. 15 November 2019. And right now, spot is 160 PKR plus per US dollar. I made a contract with a bank at 15th November 2019 forward. I have a risk that the price will increase. I made a contract with a bank that will settle 15th March 20 with the rate of 165. 165. And bank says that, listen carefully, bank says that this is a forward contract. Yes, this is a forward contract. That if price increases here, for example, actually become 167. So banks say, I will compensate you. For example, the difference is 2. Or you can buy with us at 165. You can buy with us 165. Means there are 2 options in this contract. Either settle in cash or execute. Execute means actually buy. Once again, the important point is that there is a question in the revision in the P2 as well. We made a contract of the derivative, but derivatives includes settle in cash or maybe executory. Sir, if this is the case, at reporting date 31st December 19, what we will report, this contract includes 2 characteristics. It may be settled in cash as a derivative or executory. Accounting standard says, listen carefully. Accounting standard says, you have to consider these things. You have to consider these things. What these things? You have to consider what is the plan of company. What is the plan of the company? What is the past experience of the company with same transaction? You have to consider this thing. For example, if examiner asks you that there is a contract, but there is an option of executory, non-executory, both. So you have to assess the planning of the company, past experience of the company. If it shows that these contracts are settled in cash, then go for derivative. If not, then we will consider executory. So this is the another point that I've shared with you. And if you study the material of the derivatives, one important terminology will face. Listen carefully. 2 examples. If I say that forward contract or derivative future contracts of inventory, and I say forward contract of investment in shares. Candidates, these are the revision sessions. You know very well, investment in shares is a financial asset. So I must say this example of derivative of financial asset. But this example, inventory is non-financial asset. So I must say derivative of non-financial asset. So if my handout shows that derivative of financial asset, derivative of non-financial asset, don't confuse. Both are derivatives. And accounting standard IFRS 9 says that inventory is not IFRS 9, but forward contract of inventory is IFRS 9. Investment in shares is financial asset, and derivative of investment shares is also financial asset. I repeat this word. Inventory is not financial asset, non-financial asset. But the derivative of inventory is the IFRS 9. It's financial asset, financial liability. Candidates. Now, 2 things now adding. Ethics and accounting standard. I assume that you have a good knowledge of IS 37. You have a good knowledge of IS 37. Although I have shared my notes as well. Now, read it carefully. This example. You have the handout, huh? Read it and enjoy the example. Sir, what are you saying? Enjoy. Discuss the ethical and accounting implications about the above situation from the perspective of accountant. From the perspective of accountant. Read it. Are you ready to attempt the question? Are you ready? Okay, come on. Candidates, please be with me. Come on. Gustoso, a public limited company. Now I'm slowing my pace. Which produces a range of luxury Italian food product. Luxury food product. It's now 11 p.m. and it's a dinner time for me. Which are sold to restaurants, shop and supermarkets. Prepares financial statement according to IFRS. Director of Gustoso. One role, director. So if you are sitting in the examination hall, you read the requirement, the term accountant. Then you read in the question director. So something standard we are going to put up, of Gustoso receive a cash bonus if reported profit for the period exceeding predetermined target. Gustoso has performed in excess of the targets. 31st December X7. So directors cash bonus, profit related, exceeding the targets, and already met 31st December XM. Forecast X8 is COVID. However, pessimistic due to economic uncertainty and stagnant nationwide growth. This is what the background. And there are two accounting issues. Provision. New accountant recently started work at Gustoso. She noticed that provision balance 31st December X7 significantly higher than the prior year. She made an inquiries of the finance director to explain that increase was due to substantial change in food safety and hygiene laws become effective X8. As a result, Gustoso must retrain a large proportion of workforce. Retrain large proportion of workforce. Retrain has yet to occur. So a provision has been recognized for estimate of 2 million. Has not yet to occur. Sorry. Finance director then told the accountant such inquiries were a waste of time and would not look at favorable when deciding on her future pay rises bonus. Candidate, there is an accounting standard called IS 37. An accounting standard number IS 37 says that, you know very well, that provision, you can make a provision, but there should be some conditions. What condition? Can you please reply me about the conditions related to IS 37? Provision. Provision means provision is a liability. So if it's a liability, that means that must have to meet the definition of the liability. Before making a provision, the condition should exist that it must be a liability. That means the definition of the liability must have to meet. And you must say liability is an obligation of an enterprise to transfer economic outflow as a result of past payment of transaction. You cannot book the liability until there is some present obligation. So accounting standard says that you can make a provision, but three conditions must have to meet. Present obligation as a result of past event. It must be probable and reliable estimate. So the first important thing, we are going to train our staff. Can we make a provision for this based on the provision definition? Is there any liability yet to occur? On that basis, we need to make a provision. Can we make a provision? Please apply. Is there any liability till now? Hello? Yes or no? Make an answer. No. Right now, we cannot make the provision. No obligation till now. Very good. Excellent. It's not present obligation. But they wanted to develop the provision. So number one. Why? Number one, this is accounting implications. But having this background. What background? They wanted to manage the profit of the next year. Manage the profit of the 2008. If some expenses is going to occur for the next year, they wanted to make now. Because they don't want to create any burden of the expense for the next year. That is the point. Number 2, wheat contract. Read it. Read it. Sorry. Gustoso purchase a significant quantities of wheat for use in the bread and pasta product. Wheat, huh? That's a material. These are high value products on which Gustoso records significant profit margin. Nonetheless, the price of wheat is volatile. 1st November X7, Gustoso entered into contract with a supplier 500,000 bushels of wheat, X8, X5. Entered in the contract with the supplier, purchased bushels of wheat. Contract can be settled in cash. Can be settled. Means this contract has the characteristics of settle in cash and as well to supply. Both characteristics used to also enter in a similar contract, pass and always taken delivery wheat. Candidates, are you getting the point? What we discussed earlier? By 31st December X7, price of wheat has fallen. Finance director recorded derivative statement of financial position as a loss to P&L. Is this right? Wheat price may rise. This is considering the past practice. What I said to you that it may possible derivative contracts at the end of the day, both options, net in cash as well as taken delivery. At that case, at reporting date, we have to consider our own experiences. The accountant unsure, accountant unsure. There's a question of if current accounting treatment is correct, but feels uncomfortable approaching the finance director again. Candidates, if you write this answer, you will have to make the accounting implication. That is by heading provision, same accounting matter, knowledge number, apply PAC, rule of PAC. You remember PAC? First plan, brainstorming, apply, that is the knowledge. Then case, I-37 reference case, no provision. So the provision should be de-recognized and reduce the liability, reverse the liability. Derivatives, you have to refer the derivatives. This is what? Derivative by non-financial item. Non-financial item. Inventory. So don't worry about the term non-financial item. Settle in cash. These are accounted for derivatives. However, contracts which are for entities own use non-financial assets, exempt from requirement. Means non-derivative contracts of non-financial items. It's not derivatives. It's not IFRS 9. Own use, taken delivery means that outside IFRS 9 and incorrect recognition. The contract is executory contract. Executory not initially recognized in financial statement unless they are onerous. Leave it onerous for the time being. If onerous, then the provision required. Particular contract unlikely to be onerous because wheat price may rise in. Moreover, finished goods of wheats will be sold and all these things. You can read it. Number one, the accounting implications. Number two, ethics. Ethics. This is what ethics. This is a standard paragraph. This is what you can put a standard paragraph. Just putting name of the company. Someone asked me how to get professional marks. Professional marks, do you know how to get professional marks? Number one, isolate accounting and ethical paragraphs. And headed. Number one, accounting implications, headed. Apply the rule of PAC. Then when you comes to ethics, actually the professional marks related to ethics, you have to refer in this manner. That what as an accountant, the ethical role, but refer the name of the company. If you don't refer the name of the company, the mark, this is not about you will get the professional marks. It's not possible. And yes, standard paragraphs with incorporating some things related to the case. What the case about? The case about the company wants to overstate liability. This is standard. First one is the standard one. Overstate liability, understate profit. If these are it is possible these are unintentional. But the situation exists that the director wanted to enhance the profit next year. Incentive exists apart from the IFRS, most notably the bonus scheme. And this is what the complete case of threat of self-interest and effect to the principle of objective code of conducts. And finally, what action point? Standard paragraph, action point. Whatever I have already read it. Candidates, please reply, do reply me, otherwise I will not go forward. Are you getting the point how to handle the question number 2? But question number 2, it's not about the ethics, not only about the ethics. It's about accounting standard with the ethics matter. Moreover, listen, sir, this is always the case. Now, 2 very important things I'm going to discuss here. Very much important. Listen here. Examiner examined a question of September 2019. Listen here. September 2019. The background of the case. When I started the ethics areas of the question, I told you that examiner examined the accounting, ethics, and sometimes the performance measurement aspects. Performance measurement aspect. Listen carefully. Read it. Stand company is a consumer electronics company, face a challenging year due to increased competition. Stand company at the year end 30th September X9. Unaudited draft financial statement. A reporting loss. In addition to this, the covenants, debt covenants based on gearing close to being breached and company approaching overdraft limit. Means in this case, your answer should be accounting implications plus performance measurement. That is debt covenants plus ethics. This is about the case cash advance. I'm not reading right now. Cash advance. Actually, finance director, again, finance director has taken up the cash from a company which is a related party or very close. That is the cash advance from Buster. And this cash advance actually for the sake to manipulate the profits. You can read it. Same case for preference shares. Same case for deferred tax asset. I will discuss the deferred tax asset by tomorrow. And requirement. What is the requirement? Number one, discuss appropriate accounting treatment of all issues identified above and their impact on gearing. If particularly mentioned by the examiner and impact on gearing, so it's now become special. And if something is special, you make headings. Accounting implications, effect on gearing. Accounting implication, effect on gearing. Accounting implication, effect on gearing. Then, another part. Accountant has been in a position to only few months. Finance director recently recommended all these accounting treatment made exactly as I suggested to ensure growth in business and security of the job. Again, the role, you as an accountant and the party is company management finance director. So discuss the ethical issue arising scenario, including action. Accountant should be taken. Again, a standard paragraph. So it's your assignment. You have to attempt this work, but I have identified the important thing. Number one, answer. Huh? Answer. Start with accounting. Heading. Accounting implications. Number one, cash advance from Buster. But whatever you say is there. Whatever you say is. But I have incorporated headings. Impact on gearing. Impact on gearing. Convertible preference shares. Put up. Then again, impact on gearing. Deferred tax matter. Once again, same principles. Then impact on gearing. And finally, the ethical aspects. This is what the ethical aspect. Same standard paragraph. Standard paragraph. Incorporating the things. And finally, the actions point. Conclusion with the action points. Conclusion with the action point. Same points. Aisha, you can ask me separately for the details because in PEET we are expecting that you people have already the knowledge of the topics. We just making a quick briefing. So it's not about the clarity, it's about to recall. We should, I think so, I must ask that, should you, have you recalled? So if you wanted to get more clarity, take my regular lectures, you can get, or ask me on the WhatsApp group related to detail aspect. Here only we are considering a quick briefing. Assuming that you have a good, you have already studied in the regular course. Yes, we will discuss about the performance measurement as well. Yes, I will discuss that is your assignment of the cash advance. I will discuss it. You can coordinate me on the WhatsApp, please. Candidates, listen carefully. Next 10 minutes is very much important for you people. So ask me after the session. This is March 20 question. Now listen carefully. No, in March 20, examiner has asked the ethics question, but comparatively different manner. Listen this point. Ignore all above things. This is very much important. In March 20, examiner examined some different matters about it. Don't worry about the deferred tax asset. I specifically discuss tomorrow about deferred tax asset and cash advance advice. Don't worry. But right now we are discussing some how to handle the ethical questions. This is the question. And you know that here, the scope of the question, it's not with respect to in a conventionally manner. The examiner changed the criteria of the norm way. But how? That's important, huh? First of all, requirement. First requirement is same. Discuss appropriate accounting treatment. Discuss appropriate accounting treatment of restructuring cost in financial statement. For this question, my purpose is not about to accounting treatments. Huh? 6 marks is about accounting treatment. But there is journal question of 4 marks. Discuss what is mean by good stewardship of a company. Journal theory. And what the restructuring and recognition of restructuring provision in financial statement are example of good stewardship. So you must be ready that not all the time the things are exactly according to the pattern followed in the past papers. So your eyes must be open at that point. And discuss briefly, Mr. Shaw, acquisition equity shares should be disclosed as related party transaction. Identify and discuss ethical issues arising from the scenario with Mr. Shaw needs to consider, and what action should be the consequences. Students, here the actions are comparatively different. Do you know that? No. Have you attempted this question? No. Here the actions is not about that some finance director pressurizing. Here the action is different because case Mr. Shaw, the head of accountant, listen, head of accountant, facing 2 issues. His wife is the 5% shareholding of the company where Mr. Shaw is head of accountant, equity holder. Number 1. So first important thing is that is she the related party? Number 1. Number 2, the company facing some difficulties related to restructuring. And Mr. Shaw and his wife are living together. So this is very critical matter. Should the husband discuss this matter with wife? It's more than norm situation. Another point in this case, his relative, Nephew, yes. His nephew is employee of the company. And the director decide to redundant some staff, lay off the staff. And lay off the staff includes this employee. And Mr. Straw knows that. So this is comparatively different than what action points should taken by Mr. Shaw. Candidates, this, the matter is that that's why we always says an examiner article says that feedback says that the things will not always according to pattern. And I have already developed a pattern. I have already shared the standard answer. But sometimes in the examination hall, you have to be open your, and you must the what is the purpose to discuss this question with you? The purpose is not that I'm demotivating you people. No. I'm just discussing this point that you must be ready for something other than standard things, other than usual things. You must be ready. And in SBR, you have already studied a lot of things. You can and you can apply the answer according to the requirements. So candidates, and one more thing. In last semester, September, examiner, the question is not available, but examiner already examined an ethics case about the digital matter. In the digital era, what particular ethical issues faces by the accountant and in the business? This is the journal answer, like the stewardship. So you must have to read the article. So candidates, you must have to read it. There is very limited accounting standard issue and very simple IS 37. The complexity related to related party aspect and the ethical aspect in this question. So candidates, I will discuss the advanced matter and the accounting matter and all these things. That is all from my side respect to today's. Now we are very much open to discuss. We have covered the conceptual framework. We have covered the group accounts. We have covered how to handle the ethical case. Now we are very much open to discuss as maximum as the accounting issues, the performance measurement and conceptual framework. So all the things will be mix and match for next 2 days. And I will put my maximum effort with you people to discuss the things, including performance measurement, conceptual framework, a lot of things. And you can ask me any question right now. Aisha, for derivative purpose, you can contact me WhatsApp. I can share you a limited regular lecture with you. You can get it. Don't worry. What else you wanted to know? Have you people attempted the questions I've shared with you? And my video on the YouTube. Oh, please my view. Approach my YouTube channel and if possible, subscribe it. I will share time by time different things. Article, ethics articles, it's mentioned above in the handout. So share. I've already shared these handouts. You can ask me any question right now. The article link is available here, nahi? Just a minute. It's mentioned here. This is the link. It's in the document. Candidates, please do reply the feedback of the session. You have taken the session today. Have you got confidence? Have you? Are these sessions are valuable for you specifically for today's session? How much valuable for you? Please do reply on the WhatsApp on the platform and the feedback form. We will really appreciate it and promote these sessions as max as possible. Yes, about performance, I will discuss on tomorrow or day after tomorrow. Anytime I will spend at least 1 hour, and maybe the mix of the question, like performance measurement aspect. We have already discussed in ethics matter as well. How it's done. I will also discuss. Don't worry. Please reply the feedback and any question you wanted to ask. Reply me here. You can join the WhatsApp group. We can support you. Embedded derivative. I'm not promising you, but it depends on the time. Because 15 hours for SBR, it's very limited time. It's very limited time. At least 25 hours time should be given by. Past paper, only past papers. Just briefing of the syllabus and attempt the past papers. I will share a document with you for the embedded derivative, but I cannot deliver it. But for embedded derivative, I can share you a document with you on the WhatsApp. Don't worry. After the sessions. Yes. I repeat, Mohammed Labir, I repeat. Number one, get a good knowledge of syllabus, a brief knowledge of the syllabus, plus focus on the past practice. SBR 5 past papers plus 2 specimen. That's more than enough. If the handouts are not opening, I'm sharing. I will share on the WhatsApp group. Join the WhatsApp group. Yes, current issues still relevant. I've shared I've already discussed the special purpose entity first day. I will also share more things. Next 2 days about accounting standard issues with the practice version, including performance measurement, including conceptual framework and the current issues as well. My WhatsApp number 0321 0092 321 827 1784. 0092 321 827 1784. Yes. Muhammad Hamza, conceptual framework with the standard matter. I will discuss accordingly. Don't worry. Yes, I will. Whatever the question I will share you during the session, I will definitely share the solution as well. It's required too much effort to develop the solution according to students' caliber. It's required too much effort. There's highest 21. It's not much important. I cannot say that it will not examine, but this time it's. I will discuss about this matter on tomorrow, inshallah. How the examiner can examine the current session about the ICE 21. Inshallah, all of you people will qualify the exam, inshallah. Okay, candidates, thank you very much. Take care a lot and remember me in your prayers. Thank you very much. You can contact me on the WhatsApp as well. Thank you. Assalamu alaikum.